I'm concerned, if what I think is about to happen is going to happen, which is the demise of the U.S. dollar, the hegemony of it, and its power and its reserve status. The question is, how safe are bonds? Because I have a friend. I mean, he has not a million. He has hundreds of millions in bonds. And yesterday I went and bought some more silver and hid them in my secret mountain vault. But he says, he won't touch silver. He says, U.S. treasuries are it. So with that question, when he's got hundreds of millions stashed in, they talked about the eyedropper of water and a football stadium. So I think that's a very good metaphor, the eyedropper of water, eyedrop of water, an entire football stadium. Because I think the last eyedrop is about to hit because that football stadium's almost filled up.
This is really about the power of exponential growth. And a lot of the trends that are sort of driving the world we live in at large are exponential. And the human mind doesn't do a really good job of understanding exponentials. And that's why I came up with this analogy about the magic eyedropper in the stadium. Basically, he says, look, pick the stadium of your choice. Imagine somebody takes a magic eyedropper and walks down to the pitcher's mound and squeezes out a single drop of water right there on the pitcher's mound. And that drop of water doubles in volume every minute. So minute 1, it's 1 drop in size. Minute 2, it's 2 drops in size. Minute 3, it's 4 drops in size. Minute 4, it's 8 drops in size, right? So the question is if you got handcuffed to the topmost bleacher seat in the stadium, how long would you have to escape your handcuffs before the stadium was underwater? Most people will say, I don't know, year, months. The answer is very surprising. The answer is 45 minutes. Much less time than you think. And that's just because when it doubles, each doubling is bigger than all the increases that came before it. But the really important question is what time does that happen? And that happens at minute 40. By the time you see there's a problem, the stadium's filled just a couple of minutes later, right? By the time you see the issue, it's way too late to avoid it. Your only choices at this point in time are just to sort of manage the impact. The functioning of our financial system, are you talking about the US dollar as a reserve currency, or are you talking about just our ability to afford our basic way of living? I mean, that right now, I think is getting pretty late in the game, especially if you live in parts of the world that are really suffering right now under just crushing inflation. I mean, I don't think anybody in Europe, for example, could have ever forecasted a year ago that they would be paying what they're paying right now for energy.
Yeah.
So when you look at, a lot of times in America can't see because we're a goldfish bowl. Everybody looks in, but we don't see out. And I'm looking at what happened in Sri Lanka, what's happening in Brazil, what's happening in England, what's going to happen in Germany. We can't see it as Americans.
I think the goldfish bowl is a great analogy too, because goldfish really have incredibly short-term memories.
I'm sitting here watching all this, and so that's why I keep thinking the eyedrop theory, said, when pitcher's mound is covered and I'm sitting in the top bleacher, how much time have I got?
You're right to be looking outside because collapse happens from the outside in, right? It's the weaker players that fall first. And then those are dominoes that topple over bigger dominoes. And then it all begins to progress toward the center. And yes, we live here in our fishbowl, our goldfish bowl here in the US. We do have a lot of advantages that a lot of other countries don't have. We're likely not going to be the first one to fall. We're probably likely going to be the last one. But to find out where we are in the story, we want to look out at the periphery and see how it's doing. And as you just said, Robert, the very extreme ends of the periphery are not doing well at all, right? You've got a place like Sri Lanka that's gone into full collapse. Right?
Yeah.
I don't know if you saw the videos of the people storming the presidential palace. You got to remember, we saw a preview of this happen during the Arab Spring. They experienced sudden and extreme inflation in those countries, and all of a sudden, people couldn't feed their families or keep them warm. And when you get to that point, you really don't have any other option but to throw out whoever's in power, because whatever they're doing just isn't working for you, right? You're beginning to drown. That's what happened in Sri Lanka. That's beginning to happen with greater frequency elsewhere in the world. And Europe isn't in that case yet, but it's certainly a lot closer to that destination, sadly, than it was a year ago.
When Biden abandoned Afghanistan, the next day, Saudi Arabia went to talk to China and Russia. And just a couple of days ago, Saudi Arabia switched from the petrodollar, shifting to a gold-backed yuan. And nobody even notices that. So Saudi Arabia joined forces with Russia, China, Brazil, India, South Africa.
When Russia invaded Ukraine, basically the U.S. weaponized the financial system against Russia, basically like seizing Russia's assets that were held abroad and whatnot. And a lot of other countries looked at that and said, whoa, like I'm in the U.S.'s good graces right now, but I might not always be.
Exactly.
And they could do that to me. So, what we've done in the response to the war in Ukraine, whatever you think about it, we have basically provided a pretty strong incentive for many countries to accelerate their plans to de-dollarize. And that's exactly what you're just talking about with the steps that Saudi Arabia took there. I certainly have heard a lot of commentary recently about the BRICS countries working on a commodity-backed currency to rival the dollar and probably going to be priced in gold grams and whatnot.
Nigeria is going to join the BRICS.
Yeah.
So they're ganging up on the dollar. There's two more things that happened. You had the Nord Stream pipeline was bombed.
Yep.
I mean, was that an accident? Did it just happen to blow up? The other thing that happened, the reason who's the new prime or the future ex-prime minister of England tried to raise, she's gone. The shortest term prime minister in history. The whole bond market nearly came apart. Their pensions came apart. And then they had to bring a new prime minister in already. So all of this is happening.
As you go along an exponential curve, things happen faster and faster, right? And so we're beginning to see more of these really big things that we just really couldn't have ever expected would happen. We're seeing more of these things that nobody could have seen coming, more of these sort of black swans. And of course, the more they are and the faster they happen, the more the odds of something really systemic breaking and something really bad happening obviously increases.
But a big part here is they want to destroy the hegemony of the U.S. dollar, which came in place in 1944 with Bretton Woods. The dollar became the gold standard of the world, or the reserve currency of the world. And then 1971, Nixon took us off the gold standard, and we went from being a capitalist state to a credit state. So everything is floating on debt right now.
Correct.
And I think bonds are debt also. I think they're going to torpedo the U.S. Treasury, and that's what we called, what the hell is a bond? You know what I mean? How safe is it? That was 2019. The repo market blew up again. The last time that blew up was 2008. And the reason the repo market is important is like repossession. Do you know how valuable is the asset that you think is an asset? Are they going to come and repo your dollar, or would they rather repo your refrigerator? Do you know what I mean? What has more value today? In 2019, that's what blew up also. Again, how valuable is a bond?
Let's start with explaining what bonds are. Then we'll get into, are they a good place to be now or not? Because the answer is, it's a little bit nuanced, and it's a sense of like something that might not be good to be in the long term might be something good to be in the near term. And I can explain why a little bit later in the conversation. But let's start with sort of what is a bond, right? Let me contrast it with what's an equity or a stock, because I think people understand that really easily. A stock is basically just a share of ownership in something, right? I can go buy a share of Apple. It's clear I don't own all of Apple Corporation, but I have 100 millionth claim in terms of the earnings that Apple owns and the assets that it has, right? I'm a part-time shareholder in this company. A bond is not ownership. A bond is an IOU, essentially, where you give your money to somebody and they say, okay, I'm going to pay you back, but for the risk that you're taking by giving me your money, I'm going to pay you some interest as well along the way. So it's basically just a contract, and it's just math. Bonds tend to be a little bit easier to deal with because when you're dealing with a stock, you have to take into account all sorts of things. Okay, what's the potential of this company to earn money over time? And what do I discount those earning streams back at? And what's their competition doing? And maybe they're going to take over their category, or maybe they're going to be outcompeted. Bonds, it's really just much more, okay, what's the math of this contract I've entered with you? And then you have to factor in a little bit of default risk, right? Which is, okay, what's the likelihood this person's actually going to be able to deliver on what they're telling me they're going to do?